Most people who've heard of the R&D tax credit think of it as something reserved for tech companies or research labs with white coats and microscopes. But what if I told you that any business working to improve or innovate could actually qualify for this amazing tax incentive? Imagine being able to tap into extra cash every year just for doing what your business is already doing to grow. That's exactly what the R&D tax credit offers. And be sure to stick around because by the end of this video, you'll know if you're sitting on a potential tax savings gold mine. And I'll share a tip on how to make sure you're claiming all the credit you're entitled to. I'm Rich Smith, and I help business owners and investors unlock financial tools that can help fuel their growth. Today, we're digging into the R&D tax credit, a tax incentive that's been around for decades, but is still a best kept secret for so many. Here's the deal. If you're not claiming this credit, you're likely missing out on thousands, maybe even tens of thousands, every single year. That's money you could be reinvesting in your business or for investors passing along to startups in your network that need it. Today, we'll cover who qualifies, what expenses count, and how to make sure you're set up to claim this credit easily year after year. So let's dive in and see how your business or the businesses you're supporting might be missing out on one of the best tax incentives out there. The R&D tax credit is a tax incentive designed to reward businesses that innovate, improve, or develop new products or processes. It's not just for Silicon Valley giants or big pharmaceutical labs. If your business is doing any type of research, testing, or improvement, then this could mean serious savings. Let's say, for example, you're a small manufacturing business creating a new product, or a software startup tweaking features to improve the user experience. Both of these activities could potentially qualify for this tax credit and bring cash back into your business each and every year. Now, like I mentioned before, one of the biggest myths is that the R&D tax credit is only for large corporations. The truth? Even small businesses, startups, and family-owned companies can qualify. Whether you're improving a product, tweaking a process, or developing software, this credit is designed for businesses of all sizes. Another misconception, and I'm serious about this one too, people honestly think you need to be wearing a white coat and working with test tubes to qualify. Not at all. If you're doing problem solving, like figuring out how to make a product more efficient or testing new materials, you're likely already meeting the minimum requirements. So no lab coat necessary. And unfortunately, I also hear the all too common concern that the process is just too complex or time consuming. No, not really. Yes, of course, it requires some documentation, but with the right guidance, it is a straightforward process. Plus, the payoff is worth it. Let's take a look at a few industries where this tax credit has made a real impact, so you can see how it might apply to your business. Software development. Think about that small software company working to create a new app or enhance existing features. Even debugging and testing code during development can qualify as R&D. Food and beverage. Yes, even restaurants and food manufacturers can benefit. A bakery experimenting with gluten-free recipes or a beverage company developing a new flavor line can qualify for this credit. Simply put, if they're problem solving and innovating, then all of that counts. Architecture and construction. And to my architects out there, or building designers, custom structures or experimenting with new materials to meet client needs often qualify for the R&D tax credit. If you're out there tackling challenges in design or construction, then those activities indeed could be eligible. So to claim this credit, your business needs activities to pass what's called the 4-part test. And let me stop you right there. Don't worry, it's not as complicated as it sounds. I'll explain to you what each part means in real-world ordinary terms. New or improved business component. This simply means you're working on something new or improved, like a product, process, or software that benefits your business or your customers. Elimination of uncertainty. Uncertainty here doesn't mean you're in the dark about finishing the project. It just means that there are unknowns in how to get there. Say you're testing different ways to make a product more efficient, well, that uncertainty counts. Process of experimentation. Experimentation doesn't require a laboratory. It's just about trying different approaches to find what works best, like creating prototypes, tweaking designs, or A/B testing in software. Technological in nature. Lastly, the work should be based on science, engineering, or technology, basically anything that involves technical know-how, not just business management or routine marketing. So if your business activities kind of check these 4 boxes, you could be set to claim the R&D tax credit annually. And like I said, this isn't like a one-time thing. You can continue to claim it as you keep innovating. Now, let's talk money, specifically the expenses that qualify for the R&D tax credit. Here's where you can start counting up your potential savings. Wages. This includes wages for employees directly involved in R&D activities. If somebody spends most of their time on research, you might even be able to claim 100% of their wages for this credit. What about contract research? If you've hired outside experts to help with a project, at the time of this recording, you can claim 65% of those costs. So even outsourced talent contributes to the credit. Supplies and materials. If they're used in prototypes or testing, then those qualify as well, but keep in mind regular office supplies don't count. Oh, and computer rentals or leases. For software and tech companies, cloud service expenses like those from Amazon Web Services or Microsoft count if they're used in R&D. Now, let's cover more of what doesn't qualify so you know exactly where to focus your efforts. Not every expense or activity makes the cut. So let's get clear on what doesn't count. Knowing these exclusions can save you a lot of time, so here we go. Commercial production. If you're done developing a product and are ready for full-scale production, those activities generally don't qualify. The credit is for developing, not mass production. Routine testing and quality control. If you're doing quality checks on a completed product, those activities aren't eligible. But testing during development, yes, that still qualifies. Adaptation and duplication. Making small tweaks for a specific customer or replicating an existing product doesn't count. The goal is true innovation and honest improvement. Social science research. Research in areas like economics or behavioral studies don't qualify. This credit is all about scientific and technical advancements. Moving on, let's talk documentation. Because like most tax incentives, you're going to need to show proof to back up your claim. So here's how to make sure you're covered. You need to track wages, supply costs, and contractor fees. So things like payroll registers, invoices, and employee timesheets all can be truly valuable here. Also, it's an obvious statement, but document your R&D process. This can include the project notes, the prototypes themselves, testing results. Basically, anything that shows you're actively experimenting and improving should be documented. Remember, keeping these records in real time can save a ton of stress at tax time, and they can actually help to make sure you're getting every single dollar you qualify for year after year. Now, for my business owners and investors, I'm talking to you. The R&D tax credit can be a game changer. That's because this isn't just a one-off tax break. It's a credit you can claim every single year, giving you a steady source of cash to reinvest into new projects, upgrades, or hiring. For example, if you're a VC with a portfolio of startups, encouraging these businesses to claim the credit could mean they have more resources to scale, innovate, and eventually deliver a return on investment for you. So if you're a business owner or you know business owners who could use a boost, now is the time to start digging into the R&D tax credit. The R&D tax credit is one of the smartest ways to lower your tax bill while funding the future growth of your business. And this tax credit is available every single year. It's an ongoing resource for businesses that you need to take advantage of. If you're interested in learning more, check out the link down below in the description. And I want to hear from you, so leave me a comment with any questions you have about the R&D tax credit, and let me know what you want to see more of on this channel.